Welcome back to our lecture example, Disco Limited. Right, I assume that you have included your template in terms of your cash flow statement and your T accounts. Remember your plan of action. I assume that you have transferred your opening and your closing balances to your T accounts. I'm not going to go into details in terms of the debit credit side. If you're not sure, please refer back to our IAS 7 detailed lecture. We have worked through an example in the lecture. You will identify that majority of my statement of financial position has T accounts ticked off, sorry, not T accounts, has tick marks. The reason is because I've transferred my opening and my closing balances to my T accounts. Then I tick off these amounts. I've not ticked off my goodwill because I'm able to identify that there's no movement. Now, my step number 2, I will work through the information from the top, transfer relevant details to the T accounts to be able to reconcile my T accounts in terms of my cash. Remember, I need to focus on cash. Once I've identified that there is an amount that I'm able to transfer to the face of my cash flow statement, I do that. Now, before we look at my step 2 in detail, I just want to revise a few important principles to ensure that we are on the same page. Now, when you look at your cash flow statement, remember your cash flow statement will be divided into your operating activities, your investing activities, and your financing activities. When we look at our operating activities, this will include our profit and loss line items and our WIP, which includes our trade receivables, payables, and our inventory movement. When we look at our investing activities, we need to focus on the assets from our statement of financial position, and our financing activities, the liabilities and equity. Right. Now, when you look at the statement of financial position, I just want to highlight a few things that you need to remember to identify when you read through the information. When you look at our land, we need to identify, is there a possible revaluation surplus? Right, I want to include this in pink if you need to make additional notes. Then, when you look at associates, think about your T account. Remember, on the debit side, we include our profit share. On the credit side, any dividends. The dividends will be important because on the face of our cash flow statement, remember we need to disclose our interest received and paid separately. We need to disclose our dividends received and paid separately. And we need to disclose our tax paid separately. That is why the dividends in terms of our associate will be important to us because we need to disclose this separately on the face of our cash flow statement. Then, when we look at our cash and cash equivalents line item, we need to transfer this to our cash flow statement, the face. This is easy marks. Therefore, at the bottom of your cash flow statement, you will identify that I have transferred my cash and cash equivalents at the beginning of the year and at the end of the year. 73161224180. 73161224180. Right. We have our non-current asset held for sale. Identify that this is a movement from 0 to 79200. Therefore, just ask yourself a question. There might be an impairment, which is non-cash. Right, then we have our share capital. We're able to identify that there is a movement from 2.2 to 2.5. Therefore, if you think about your T account, this will be a debit in our bank increase and a credit in our share capital. And what do we need to know? This should be part of our financing activities on the face of our cash flow statement. Therefore, immediately transfer this. It's an easy mark. Proceeds from issue of share capital. I've transferred our calculation. It's an inflow. Include your plus sign. Right. And let's tick off these amounts. We've used them. Then, if you look at my mark-to-market reserve, remember that this will be an after tax amount and that the tax will be based on our CGT rates. When you think about our revaluation surplus, this is after tax and this will be based on CGT rates. Then if we look at our retained earnings, why will we prepare a reconciliation in terms of our retained earnings? Remember, if you look at the right side, when we declare dividends, we will debit our retained earnings. Our retained earnings will decrease and we will credit our shareholders for dividends. And then once we pay the dividends, we will debit shareholders for dividends and credit our bank. Therefore, we will have to reconcile our retained earnings to be able to identify if there is any dividends. Then we have our NCI, also important. Why? Because we need to include the dividends on the face of our cash flow statement. Therefore, we will have to identify if there is any dividends. Then long-term liabilities, long-term loan, investing activities, deferred tax. Remember, this is non-cash. Now, remember, on the face of your statement of cash flow, we need to include our tax payable. But to be able to do this, we will first have to determine our movement in our deferred tax T account and transfer this to our tax payables, right? Then our shareholders for dividends, we have talked about this just now. Now, let's have a look at our profit and loss statement. If you look at our profit and loss statement, immediately I'm able to identify my revenue should be included in my cash received, my cost of sales, cash paid, other expenses, part of my cash paid. Therefore, immediately, if I think about my template, which I have already included, remember, I've identified that I need to calculate my cash received, and this will be my calculation number 1. I need to calculate my cash paid, and this will be my calculation number 2. Therefore, I've already identified that I will have to include my revenue as well as my cost of sales and my other expenses in my calculations. Then the next line item, my finance cost, immediately on the face of our cash flow statement. Therefore, we transfer this on the face of our cash flow statement. Remember, we need to indicate our interest paid, interest received, dividends paid, dividends received, and our income taxes. This is our interest paid. Therefore, at the end, most probably, this will include a negative. Next line item, share of profit of associate. Transfer this to our T account. If you look at my T account at the bottom, I've got calculation 1, 2, and 3. Therefore, calculation 3 at the bottom, my profit share will increase my investment and associate. My dividend will decrease, therefore on the credit side. Next line item, income tax expense. My income tax expense, think about your journal. We will debit our expense and we will credit our tax payable, 479,380. Therefore, on the credit side of my tax payable account, I will include 479,380. Then if we refer back, I've ticked it off. Other comprehensive income, I don't know. Profit attributable to owners of the parent. Now, this we will transfer to our retained earnings, which you will remember that I have transferred opening and closing balances. But if I do remember correctly, they have provided us with a dividends declared amount. I think at the bottom somewhere. Let's just scan through the information. Note 7. Disco Limited declared a dividend of 45375. Therefore, we do not have to include our retained earnings journal, but we are able to transfer this to our shareholders for dividends account. If you look at my shareholders for dividends, remember, if they've declared we will have to debit our retained earnings and credit our shareholders for dividends account. And this will be with the amount of 45375. Therefore, this is the dividends that they've declared. You do not have to write out the details. I just do this for you to be able to follow my discussion. And I have ticked off note 7, the amount. Right, let's refer back to our information. Non-controlling interest. We will have to reconcile this account. Therefore, let's transfer this amount to our NCI. This will be included on the credit side of our NCI because this will increase the value of our NCI. Now, let's have a look at the additional information. Note 1, included in other expenses in the consolidated profit before tax of Disco Limited Group are the following. Depreciation on plant and equipment. Now, immediately, this is non-cash. We need to take this out and we need to take this into account in terms of our T account of PPE. Now, let's first take this out. 528,000. We need to take it out from our other expenses. Our other expenses, look at this, guys. I prefer to make use of my negatives here. I include negative amounts because this is cash paid. And I include positive amounts because this one is my cash received. Now, if I think about my non-cash items, which is my depreciation, I need to add this back. This will be a positive 528,000. And I need to take this into account in terms of my recon of my T account. If there's any depreciation, on which side do we include our depreciation? On the credit side. Therefore, our depreciation for the year will be the 528,000. And I'm able to tick off the amount. Now, unrealized exchange gain on foreign debtors, 139,700, unrealized. Therefore, this is not yet cash. Unrealized, it's not yet cash. Therefore, non-cash, we need to take this out. And if we think about our trade receivables, we need to take this into consideration in terms of our T account. Right, if you think about your journal in terms of your unrealized exchange gain, look at this gain. If it's a gain, we will debit our trade receivables and credit our profit and loss. This is a gain. We will credit our profit and loss. Now, if we need to take this out, remember, this income was included in our expense. Therefore, it decreased our expense. Now we need to increase our expense. Remember, it decreased our expense. Therefore, we now need to increase our expense. Therefore, we take it out. This will increase our expense. And if we need to include this in our recon, in terms of our trade receivables, this should be included on the debit side. Look at the debit side of my trade receivables. Calculation number 6. Exchange gain, 139,700. Okay. And let's take off this amount. Now, realized exchange loss on our long-term loan. Think about the word loss. What does this mean in terms of our profit and loss? In terms of our profit and loss, we will have to debit the loss because this is an expense. And this will be the 126,500. And we need to credit our loan account. If we debit our loss, and we now need to take this out, we will have to add this back. Therefore, add back our exchange in terms of our loan plus we add it back, and this is 126,500. And then in terms of our loan account, this should be included on the credit side. This is our exchange, 126,500. And we are able to tick off the amount. Then, other expenses are furthermore shown net of any other income, reclassification adjustments, and or profit, which may be forthcoming from the additional information below. Nothing really at this point of time. We just need to read the information carefully.